Good afternoon, traders. It's Bill Baruch from Blue Line Futures. And coming to you today, let's take a look at the equity market, look at these indices, and as we drive into non-farm payroll tomorrow, uh, really good close in stocks, but it's less, to me, less about the close today. Obviously, we melted higher, but really the groundwork that was laid all week long. And you take a look at here in the S&P. The 21-day moving average, we didn't even get near that. And on our research that goes out daily, every single day, talks about the levels, actionable bias, etc. We didn't really have major three-star support. Obviously 4108 was an area to start the week, but major three-star support then did not come down until 4055. That was the close for May 26th with gapped higher. We didn't get down there. A nice higher low today and very constructive. Ultimately, really spending a lot of time out above that May 6th area and, really paving the way higher. I've been talking about this week, looking for good groundwork. You don't want these big excessive moves higher every single day. Obviously, it feels great to see, but we had May 26th and May 27th, because that's what happens in a bear market. You need to see this market pull back, consolidate, and buyers show up. And look, I've been talking about it too. Sloppy, but nice little bull flag patterns that are building here, and that's really about to me, more about the market profile, trapping shorts at lower levels. The Nasdaq, we got good leadership from the Nasdaq tech stocks. The Nasdaq did move out above a new high on the week, which is great. Obviously, still some strong resistance. This is major three-star resistance overhead, 12 930s. But just like the S&P, didn't get down to the 21-day moving average, held very constructive against support, finished the session back above that May 6th gap, very constructive. Also very similar. You have the bull flag like pattern here and moving out through. I find that very favorable. And the Russell doing the same thing. Russell's really moving. It was really oversold, doing very similar bull flag pattern. Now, the Russell has some good overhead resistance here too. The 50-day moving average that does come in here, 1921. I'm talking about the S&P getting up there. You have a little bit of room to stretch. Nasdaq, obviously, quite a bit of room to stretch. The Russell, which has been moving down pretty sharply here for a little bit longer, and it more excessively, has a 50-day moving average a little closer, aligning with that trend line. So a lot of resistance to the Russell there. Same thing with the Dow, very constructive, even more constructive, really leaving tails out above that May 6th gap. Really constructive all week. And then we're getting it in that the Qs against the XLP, relative strength against there. We're getting that burst higher today. Really good. I mean, obviously you got a good bit of resistance here, and then that 50-day moving average in that right overhead. So, that's something we're watching very closely. Can we get another thrust tomorrow? Non-farm payroll tomorrow is going to be the big one. I'll get to that in a second. But going back to what's driving those Qs, I think today Microsoft, it only finished up about 80 basis points of the day. But the fact that it drove so well off those lows, it was down 3-4% on the open. They revised guidance. They took this gap out. They revised guidance lower for revenue, and seeing bad news, seeing the market digest and respond positively to bad news starts to tell me that again, something we talked about last week, seller's exhaustion. So we got the seller's exhaustion, Microsoft battle back, and then you got leadership. Apple had a decent session, held the 21-day moving average very well. NVIDIA had an awesome session, broke out, to the highest level here. Was that since May 5th, taking out that May 6th level, really nice, and has some good room to stretch up here to the 50-day moving average. Alphabet also doing really well, doing some heavy lifting. Got some room here to stretch as now we're really kind of moving above that May. Alphabet's sort of been lagging. It had a lot of work to work through here from that the Snap news, but getting out into this range here, I think is a very good positive. Holding the 21-day moving average as well. This is good stuff to see here. And like I said, going back to the S&P, tech's got to drive it. Tech's got to be a leader. There's definitely some heavy lifting to do. Non-farm payroll tomorrow, but I think it's 325,000 jobs expected. ADP revised lower, and the market was able to do some good things today. So the bar is set very low in job growth, with ADP coming in low, revising lower for April. The bar is set low. Remember, ISM manufacturing, the employment component, that contracted. So again, the bar is very low for job growth tomorrow. If we come in below 325, we come in at 200. I don't think that's going to throw the market off. A contraction in jobs, yeah, that's going to throw the market off. But wage growth is going to be watched very closely. They're looking for that 5.2%. I think it is annual growth, but four tenths month to month. If that really exceeds those expectations, that's really inflationary. That's the sort of the wage growth spiral that we're talking about. So if you get really bad growth and then you get excessive wage, really bad the jobs themselves growing, and then it's very excessive wage growth, then that could be ugly. But if everything sort of stays in line, this is the window that we have to see this market rally into July. But yeah, don't hesitate to reach out. Check us out on our website, bluelinefutures.com. You can check out, sign up for our research there. Go to our YouTube channel, Blue Line Futures on YouTube. And don't hesitate to reach out to us. Email us too, info@bluelinefutures.com. Remember, though, futures trading involves substantial risk of loss. It is not suitable for all investors.